Welcome back to the channel, everybody. I am Mick Alfany. So let's begin here with this little post by Ripple, and it says the global value of CBDCs could grow dramatically from $100 million today to $213 billion by 2030. Now that's a good amount, but it says here, they clarify, it says, according to a new report from Juniper Research. There's no way I believe that. Absolutely no. They're underselling it. A lot of times when people make estimations, when companies make estimations so that they're, just in case they're wrong, they will choose the lower end to play it safe. I see this all the time, even when it comes to crypto and even stocks. A lot of times people know that number could go high, but they never tell you that high number. They always give you the low number just in case they have to save face. They can be wrong. They don't want to be too wrong. I understand that, but I keep that in mind when I'm looking at this 213 billion. Listen, that's pretty good numbers. No, it could be trillions. You mean to tell me that all these countries around the world are pretty much forcing CBDCs on their people? They're not, some of them not even asking. They're forcing CBDCs on the people. Heck, even one country recently say, hey, we're going to cut off cash so it can funnel the people into their CBDCs. You mean to tell me that globally, you think there's only going to be 213 billion? Listen, absolutely not. It will be much, much higher than that, in my humble opinion. And we will connect most of that. As long as Ripple continues to do their job, Quant, Stellar, which they've been doing a fantastic job, we will connect most of that. It will flow through us. All right. I have some articles here coming where it talks about the decoupling effect of the West from the East. United States from China, and certain things that are going on, certain dynamics. They're going to need everything to be glued together. Definitely 100%. So 213 billion, absolutely not. But, at least they're giving us some more numbers that we can keep in our minds. We can crunch those numbers later, add them to some equations later, but right now what people are more focused on, or should be focused on, is what I'm focused on, is just watching the flux of the banking system. All right. While they try to keep people's capital in the banking system, they continue to tell people, oh, no, everything's good. The Fed is telling them that. Jerome Powell has said that, oh, no, everything's OK with the banks, even though bank after bank continues to collapse. Now, there was, listen, I forgot which bank it was. There was another bank that was in flux, and then they made a statement and they were saying pretty much, no, we're OK. We're good now. And it's just, I'm looking at the data. I was looking at the data on this bank, and I just was saying to myself, this is mind blowing that they can even say such a thing. The problem is that the regular people actually believe that. Now, like I said, I think it behooves everybody. Some of us, we still have to interface with these banks. Some people, some of us are completely out of the system. But if you have to interface with these banks, you have to deal with these banks. It doesn't hurt to check that bank's health, to make a few phone calls and check that bank's health. Or heck, if you have some time, do some research on those banks. Which, listen, short term, people are going to have to be very careful and protect their value. That's just how I personally feel. Long term, of course, that lends to the rise of the new financial system, XRP XLM. They've been just going wild as of late with partnerships, getting in deep, everything. You saw what was going on. You just had Ripple in the United Arab Emirates. Then you had Coinbase praising the United Arab Emirates. I think, was Coinbase there also recently? I know I just read an article where they were praising the United Arab Emirates because, as we all know, the UAE has been trying to make itself a crypto hub. There's a lot of capital going to flow through the UAE. They're not playing any games, and they're in competition. They know it. They're in competition with the UK. They're in competition with Hong Kong, right? We're not even thinking about United States. They're dragging their feet so far behind. So we're not even thinking about that. They're not even in the game yet. But also just keep in mind that MiCA legislation in Europe, that puts 2024 on the map for great possibilities. Great possibilities. That when they approve that MiCA legislation, it's really just up to the companies now whether they want to run wild in Europe or not. But we have to watch the catalyst. I don't like to move if there's not a catalyst, right? Having a catalyst brings a certain degree of certainty to if a price is going to rise, if an asset has potential or not. So I need to see, okay, well, once 2024 comes in, MiCA legislation is fully rolled out. Everybody can play, Stellar can play, Ripple can play in Europe. Okay, let me clarify that. They can play, Algorand can play, and they're already deep there. They've already built a lot of different infrastructures there. So now we need to start paying attention to different announcements, really combing the internet. Okay, which companies are rolling out services on the chain? Who's using the infrastructure? Are they up and running? Who are their clients? So anyway, at least they're giving us some more data to work with here. I think a lot of people are going to use our wallets outright. I'm going to continue to say that. But let's move on to another article here, all right? Give us some more stuff that we can wrap our minds around. So this article here is from cointelegraph.com. And listen, before I read this article, protect yourself, protect yourself, protect yourself. Be careful out there with your value. I mean, it's your value, but I would be careful. I don't play with capital at all. All right. And definitely, I never think that anybody should use capital that's detrimental to them. Like if it's crucial to your life, if that value is crucial to your life, it could be harmful to you in your life. If you lose that capital, I don't think that that's something to play with. And I have to say that because I see so many articles being written and it's that season again where they're promoting dangerous things. I saw one thing where someone lost 500,000. Like that, I think it was in 4 hours, they lost 500,000. I said, whoa, why would you know what these particular assets are all about, the riskier ones, the meme coins and such. Why would you, it just blows my mind. That's just unthinkable. That's unthinkable in my humble opinion. But that's being promoted in mass everywhere. Hey, listen, I'm not here to lose money. I'm here to make money, right? And so far we've been doing a pretty good job. All right. From the beginning of the channel till now, we've been doing a pretty good job. All right. So protect yourself at all times. Hey, do what you want to do. I'm not a financial advisor. It's not financial advice. I just personally think people should protect themselves, protect their value, whether it's from meme coins, being wise in what you invest in, whether it's from banks collapsing, protecting your value, dollar collapsing. Listen, I'm going to keep my guard up, my chin down, my guard up, and I'm protecting myself at all times. Anyway, so now this article here is from cointelegraph.com and it's titled "Defending Against SEC to Cost Ripple $200 million." CEO Brad Garlinghouse says this is important. I'll get into that in a moment. Ripple CEO reveals $200 million spent defending the SEC lawsuit and laments about U.S. crypto regulations and a politics first policy, that's interesting, advising entrepreneurs to avoid the United States. That's already been happening. Remember, it was like a year ago, and I was talking about, and I was telling people, although people told me, oh, Mick, no, it's not that way. I told people, I said, listen, I know a lot of people who are leaving the United States. They're starting businesses elsewhere. Remember I was saying that? I said that a lot of times. And I also was talking about digital nomads and people were leaving the United States and they were going to other places, right? A few other places that are pretty much greener. It's greener on the other side over there, right? For starting a business, working there, living costs, things like that. And now you have Ripple CEO saying the same thing. He's saying, hey, avoid the United States. It's not good here, right? So, I mean, that's a powerful statement. But what's even more powerful is that for the companies, and this is why a lot of crypto companies are going to go away. And people have to be careful where they're placing their money because a lot of companies don't have $200 million to play with. They'll be out of business. Like even when some of them are paying the fines, after they pay the fines, they're done for. That's it. And this is one of the ways the SEC has been crushing companies. But let's read this little tidbit here. It says, Ripple has spent $200 million defending the case brought against it by United States Securities and Exchange Commission, according to CEO Brad Garlinghouse. Garlinghouse dropped the figure during a fireside chat at the Dubai FinTech Summit on May 8th. He stated that the U.S. is stuck compared with the regulatory process of the United Arab Emirates. I was just talking about this. United Arab Emirates Virtual Asset Regulatory Authority and the recent markets and crypto assets MiCA legislation bill in the European Union. I told you, those are the two places to watch. These are catalysts to watch. We can run wild in Europe 2024, and then we have to stay on top of what's going on with the United Arab Emirates because we are in deep there. Whoa, Nelly. Hedera is deep there. Algorand's deep there. Ripple is deep there. Stellar is deep there. I mean, Listen, the entirety of the MENA region is ready to play. They're ready to play. That's a lot of value. And they don't kid around, and they are serious business. They are money makers. They know what they're doing. That's a lot of value. Just the tokenization. Then the connections that they have, the corridors that we can connect, not just the ones we've built, the corridors that we can connect. That's a lot of value. I have to have a piece of that. I have to have a piece of that. This is personally how I feel. I'm here to make some money. So that definitely gets me excited. But let's continue on here. It says, in a message to SEC Chair Gary Gensler, Garlinghouse expressed regret about the U.S. Falling behind significantly as Ripple expands to the United Arab Emirates. Well, you know, I personally wouldn't express any regret to Gary Gensler whatsoever. You know, my father always told me, he said, never let him see you weak, son. This is war right now, but Ripple has their warriors on the front line, the lawyers and such like that. And maybe that's just the way the article writer is phrasing that. But never show weakness before your enemy. Just don't do that. So Garlinghouse said one of the first pieces of advice he gives entrepreneurs when they ask him about getting something started is, quote, if I were you, I would not start in the United States. You know what's even crazier than that? Not crazier, but like what's interesting, there's a lot of big money people saying the same thing. Same thing. And those who are building within the United States, they have had a heck of a struggle. I mean, one of the most publicized ones was, if you saw that viral news clip that's going around with Kevin O'Leary. And don't get me wrong, I have a lot of disagreements with Mr. O'Leary, but he's right. There's some places in the United States, they're so overly regulated. I mean, it's impossible to thrive there and build a business there. So that was when he was saying he took his stuff. I think it was to Minot or Fargo, North Dakota, somewhere that was more friendly to starting up companies, business, you know, things like that. But it's the entirety of the United States. Yeah. Why would you struggle here if you could just start a business somewhere else? And I think that's just going to rapidly continue. And of course, that's going to have an effect on the economy as well. And as that has a negative effect on the economy, a lot of business moves elsewhere. Obviously, that's going to affect the rise of the new financial system, right? And then more buildings are not being used. So let me clarify. More buildings are not being used. So that's going to obviously, or buildings are not being purchased, which obviously is going to affect what? That's going to affect commercial real estate, which is a huge sword of Damocles over the heads of the small and medium-sized banks. Then that can affect, I'm piecing all this together, then that can affect obviously the small banks needing the distributed ledger technologies to access more capital for traceability of where funds are going, to correct mismanagements of funds, to utilize smart contracts to enforce monetary policies, all of these different things to access different corridors around the world, conduct different business. There's new capital making opportunities that will open. So they're already starting to turn to us. They're already. Then you have offerings like on Stellar, you have Stronghold, and Quant as well, separately. But you have offerings like Stronghold that are basically drooling and waiting to feast on the small banks as soon as they say issue regulatory clarity in the United States. So you have all of these different things going on. It's an exciting time. Don't get me wrong. Also, it's a great time of struggle as well. So there's this weird dichotomy, going on. I go with the flow. I try my best to maintain a balance, but I feel both sides of it. I feel the excitement, I feel the pressure, just like everybody else. So now let's move on to another article here. All right. I think we got a good flow going today. It takes me a while like that. When I have a day or two off and then I come back like yesterday, it takes me a while to get my flow back, but I'm starting to feel it, baby. I'm starting to feel it. So now we have some Stellar related news. So listen, did you watch this little clip? This clip here is exactly why I firmly feel we're going to run wild in Europe, and all United States has to do is just give us regulatory clarity, get out the way. It's going to be domination. This was a video they posted where Donnell Dixon is doing an interview with Jenny Johnson, the head of Franklin Templeton, and Johnson is just drooling all over Stellar. Oh, the fees are so great. The control that they have as far as issuing things on chain, the smart contract. This is just a piece, by the way. This is a piece. We've seen little quotes here and there from Johnson, The cheap fees, you can't beat that. And let me tell you something. Thanks to the research I was doing on FedNow, once again, it confirmed something that I was paying attention to. I was doing some research on FedNow because, of requests from Old Man Crypto. And let me tell you something. Those low fees, you have no idea how much that's going to come in handy. There's a reason they rushed the FedNow system, and it's rushed, by the way. It's rushed, all right? Not only that, we're going to take a lot up. I feel it in my bones. And because of certain precedents that they have set, I'll talk about that in the members only video once I'm finished putting that together. We may take a lot of capital from them. They like in every possible way. It just looks like they're about to hand us capital because they're lazy. But anyway, back to this here. The way Franklin Templeton just is drooling over Stellar. It told me a lot. It tells me that a lot of other companies also feel the same way about Stellar. See, because what Stellar does, it allows you to maintain your power. And you can move capital very fast, lightning fast, secure. You got smart contract capabilities. You can just stop that capital at the press of a button. Then she talked about the clawback thing. Like if there's ever a problem, being able to resolve that problem quickly, you can do that on Stellar. That was one of the things that Johnson mentioned. So, I mean, all of these different things, these companies love that. So just never forget the precedents that have been set. United Nations, the White House calling Stellar, Franklin Templeton, IBM, Everynet, Stronghold, Velo. Look at the companies. These are huge companies. Like thousands of stores, one of the investors in Everynet or LightNet owns. Thousands. They said like 7,000 stores in Japan. These are powerful entities that are showing you that there is a big money interest in Stellar. Right. So this article is from newsbtc.com and it's titled, Pro XRP Lawyer Weighs In on the Ongoing Lawsuit Ruling. It says here, Bill Morgan has weighed in on discussions regarding the XRP lawsuit while the crypto community awaits the judge's ruling. Morgan responded to a Twitter user, Mark Fagel, who's been debating the XRP lawsuit with John Deaton. Morgan noted, like this is so funny. Twitter reminds me of like the old neighborhoods and people stand outside and they just debate all day. They call it building. You can build or destroy, right? That's what they used to say. And when you're building, you're having this conversation where one person adds something, another person adds something, and there's a lot of debate, That's what it reminds me of. They like to build with each other. It's steel sharpens steel. They're mental warriors. They like to battle. Anyway, so it says Morgan noted that Judge Torres was clear regarding her line of judgment on the Ripple case. Notably, the main issue in the case is whether or not Ripple sold XRP as a security. In Bill Morgan's opinion, Judge Torres will base her judgment on facts, regardless of the SEC's broad and undefined position. Also, Ripple argues that it did not require registration since it didn't sell XRP as an investment contract. That's also very interesting and important to know. Then it says here, however, the SEC took a broader stand. And I think this is where they messed up. I really feel like this should be highlighted, right? They got greedy, and I think they messed up by being greedy. But let's read this a little bit here. It says, however, the SEC took a broader stand that all XRP sales are securities. All. Remember, we had that precedent set in the second in that other case, the LBRY case, where the judge decided that secondary sales of these crypto tokens are not securities, right? So that's going to come in handy also. What says here? Relying on the first allegation that Ripple distributed XRP through statutory underwriters, Morgan is unsure how Judge Torres will decide the case and why the SEC overstretches its positions towards XRP sales in the secondary market. Morgan noted that the SEC argues that Ripple's XRP continuous offering in the secondary market violates securities law, like I said. And this is key. That other precedent that was set could come in handy here. That was major. It says they've stretched it toward on-demand liquidity customers, which is insane. That's not an investment contract. See, I think they messed up. It says stretching toward ODL customers who are not investors. Exactly. They just use it. The SEC is so insane at this point. They're saying we don't care. If you have XRP, we're trying to say that was an investment contract. All right. Even though the people on ODL only are using it for utility. It says, in addition, he said that all XRP sales sales occur in the secondary market, since Ripple has only offered XRP to on-demand liquidity partners since 2020. Looking at XRP to become, if we can actually, bring in all of these trillions, and I think that we can, I think XRP could become the store of value, right? As far as digital assets, I think it could be that. I think it could become one of them. There's always multiple store of values. I don't know why people think there's only one. Most people, they don't really trade in precious metals. So they only know gold, right? They even forget about silver sometimes. And silver is pretty freaking good. I like silver. But they forget there's palladium, copper, silver, gold, platinum, right? So I think that there'll be multiple stores of value when it comes to digital assets, not just Bitcoin, right? And I think that there'll be mechanisms that will be in place in the future when there's regulatory clarity. I think there'll be mechanisms to provide acceptable stability. I don't think there's going to be a lot of volatility. I just don't. Like with gold, I don't think there's going to be a lot, even though I'm pretty sure gold is going to go up. This is my humble opinion. I'm pretty sure gold is going to go up, but that really doesn't make a difference as people are just trying to protect their value, and gold is definitely going to do that because the dollar is in trouble right now. But you can have XRP, might be a store of value. I think quant definitely could become that because of how high the price can go. And I think people will just scrape some off the top. If there's staking involved in the future, they'll just live off of what they're making, from the interest that they bring in. There's so many possibilities. I'm playing with these thoughts in my mind, but let's move on here. We've only gotten through 4 articles. I always do this. I have a good time with everybody out there. We get through 4 articles. I have like 20 articles up here. Some of those will become members only videos. That's how it's going to go. So let's move on here. This is another article here, and it's titled, Ripple Doesn't Hinge on XRPL's Decentralization. So it says here, Bill Morgan is saying a lot right now. Bill Morgan, a lawyer and digital asset enthusiast, recently commented on Justin Bond's CIO of Cyber Capital's statement. He is known for sharing his thoughts on the ongoing Ripple versus SEC case. Well, that we know. Let's scroll down here. It says, the Ripple defense does not hinge on the XRPL being decentralized or the degree of decentralization. It hinges on the application of the Howey test. The factual relevance of decentralization to the application of that legal test is yet to be decided. Bonds recently tweeted that the XRP versus SEC case hinges on the decentralized nature of the XRPL. No, I've never thought that before. I've never thought that. I think that it doesn't hinge on it, but it could affect it, obviously, when you're talking about investment contracts, but I didn't think it hinges on it. Says he also added that he had been researching XRP since his early days, okay, and that he remembers the trade-off of decentralization being recognized. All right. Morgan had a defense argument that supported Ripple. He stated that Ripple defense does not, I'm sorry, there's a little something here is cut off, but we get the gist of what they're saying here. But yeah, I never thought that. So let's move on to another article here, but that's interesting to know that some people are going towards that mind state, and that could come in handy later. Who knows? The case is not over yet. I hope it does end soon, but that may come in handy later for sure. So now, this article here is from thedailyhodl.com, and it's titled, U.S. Banking Turmoil Now Bigger Than 2008 Financial Crisis. Ooh. But real storm hasn't hit yet. We've heard this from so many economists. The economists are shining right now. They're doing all the interviews. They slapped their desk. They picked up their what's that suitcase? Those little old school suitcases. Put their papers inside and went right to the news studio. Okay, let's get serious here. But no, there's so many economists coming out. I've never seen this before. So economist Peter St. Ong. All right, let's see what he has to say. Says economist Peter St. Ong says the current banking crisis is already larger than the turmoil witnessed about 15 years ago. I'll say it's much more impactful. It's much more dangerous right now. Oh my, because it looks like they have no way out right now. That's what it looks like. Once again, I have to emphasize the war that's brewing between the small banks and the big. That's definitely going to exacerbate the situation. Let's keep going though. In a new video, St. Ong says fallout in the banking sector has now eclipsed the global financial crisis of 2008. St. Ong says that investors should brace for more collapses. This is an economist, a respected one, saying this. Although we did call this about a year and a half ago, where I was saying that the banks were in trouble. Didn't I say that? I said they're in trouble. I said they're in big trouble. Didn't I say that? Yeah. St. Ong says that investors should brace for more collapses, even though the Federal Reserve is saying otherwise. I pointed that out also. I thought it was crazy. Jerome Powell really said everything's okay. And then there was whoever that executive was from one of those banks. It wasn't Pacific West. It was another bank. I can't remember which one. And that individual, even though that bank is having a terrible time, said, no, everything is okay. I don't know where this delusion is coming from. All I know is, listen, I'm going to protect myself at all times. At all times. No one's going to take my capital, lock it up, buy me in. No. And I don't like it when these exchanges freeze people's USDC and Bitcoin. That's their capital. And you're just going to stop them from accessing their capital? Listen, you'd never have my capital again if you did that to me. No, you're not going to play with my capital. No, not at all. Anyway, let's continue here. It says, quote, just hours after Fed Chair Jerome Powell told America the U.S. banking system is sound and resilient, it fell off a cliff as major regional lender PacWest collapsed over 50% in aftermarket. So paired with the collapse of the First Republic last weekend by assets, the 2023 bank collapse has now officially exceeded the 2008 collapse, with apparently a lot more to come from this very sound and resilient banking system of ours. If you didn't see that video yesterday, it was a short one. Give it a watch. They're saying that 722 banks. Listen, just go watch that video. My word. It says the Economist believes the collapse of First Republic and others is likely just the tip of the iceberg. Yeah, I'll say so. I'll say so. Using the 2008 banking turmoil as reference, St. Ong predicts that hundreds of banks will go under in the next 12 months. Hundreds. I hope people are hearing this out there, right? So they don't suffer when you don't have to. This is why research is important. Can you imagine just skipping an article like this, or skipping the one where they're talking about 722 banks, or we skip an article on the other one where they talked about 200 banks? Because you imagine we didn't know this information, and then maybe one of us unknowingly use one of those banks, then they go under, they lock your funds in, buy you in, or something crazy. Oh man, research is important. So it says here, St. Ong predicts that hundreds of banks will go under in the next 12 months as the economy feels the wrath of the Federal Reserve's aggressive interest rate hikes over the past year. Quote, what's scary here is that going by 2008, the early collapses are only the beginning, the screaming prelude to an extinction level culling of banks crawling off to die. I tried to warn people for how long we've been here now? 2 years? That the banking system was in trouble. I hope people prepare themselves for what is to come. It's not just the banking system either. It's not. This is going to be widely felt. Many systems are antiquated right now in the United States, and they are poised for a collapse. It says, in raw numbers, the 25 U.S. banks that collapsed in 2008 were followed by a drumbeat totaling 440 banks in the following 4 years. That's 110 banks per year compared to 2 per year pre-crisis. 2 per year. So we haven't begun to see what's coming. Interest rate hikes typically take 12 to 18 months to really hit the economy, and we're barely 6 months in. Then we have another article iterating something similar here, but this is more on a global level. This is from U.Today. It says here, Rich Dad, Poor Dad author. Why do they always say that? Just say Robert Kiyosaki. It says world banking system collapsing, doubles down on his Bitcoin bet. Well, listen, I'm going with gold. There's too much fluctuation with Bitcoin for you. There's so much fluctuation with Bitcoin. People are putting their money in. You buy a full Bitcoin at its height thinking it's going to go up because everybody's calling for such high prices for Bitcoin. Then it goes down and you lose some value. Why would I want to store major value in that right now? Just my humble opinion. Bitcoin is a good money maker, but store of value, in my opinion, gold, silver, that's store of value. You wait till they come down a little bit. You can just use logic and you know when they're going to come down. People are going to liquidate after a crisis, then those prices come down. Then it's easy to get in heavy, and then the price goes up. As soon as disaster strikes again, people retreat back to gold and silver, prices go back up again. This is very easy. Some of us are swimming in gold bars, right, to protect that value. And like I said, you don't even have to. Like some people custody their own gold bars, and some people don't. Some people keep it in a vault, right? They keep it in a vault somewhere. You got your certificate. You can collect that anytime you want, you know. So anyway, no. Okay, so wait, he clarifies a little bit. So I guess the writer here just wants to emphasize Bitcoin, but let's go here. It says he believes Bitcoin, gold and silver. Thank you. I was about to say, come on. There's no way you say Bitcoin without saying gold and silver. It says he believes Bitcoin, gold and silver are equally powerful risk hedges. I agree with that. Yes. Okay. Still, like I said, I think Bitcoin's a moneymaker. Store of value, unless you got in low and it's just going up and you don't have to worry about losing any value, then it's not really preserving value in that way, in my humble opinion. But anyway, and there's a heck of a lot of volatility in it. It says in a recent tweet, Kiyosaki, that's just my humble opinion. Okay, I'm not trying to change anybody's mind about Bitcoin. That's just my humble opinion. Kiyosaki doubled down on his BTC bet and recommends his followers stick with it. Yeah, like I said, I do think that Bitcoin will go up in price. When? It depends on when the economy is doing worse. People will retreat to it, you know, at the same time as people will retreat to gold. The problem is that when it drops, those liquidations come hard and fast, you know, and that price drops. You know, that's what I'm looking. I try to be realistic. I'm not here to lose money. So Kiyosaki tweeted that what is believed to be, quote, the best collateral in the world, treasury bills, have gone up by 100 basis points. The guru pondered if that meant that the global banking system is about to face a major collapse. Yes. I think everybody can see that. Treasury bills do not work anymore. I think everybody knows. I think everybody knows that. Everybody who's doing research, we know, sir. We know. He stated suggesting the best ideas now is to stick with gold, silver. Then he puts Bitcoin. He said, and home defense. I'd say so. Like I said, a lot of people have their stuff in the vault. But, you know, if people are custodying things at home, yeah, sure, you definitely want to defend your home 100%. So we're going to end off with a little bit of gold news here. This is from fxempire.com. And let's start here where it says gold market technical analysis. Gold market stabilized a bit during the trading session on Monday as we continue to see plenty of buyers on dips. Of course, look, gold buyers tend to be very intelligent. We're going to wait till that price come down a little bit and then we'll grab some. We'll watch consolidation if we need to. It'll come down a little bit. There's going to be a catalyst for it. Somebody's going to liquidate en masse. And then we're going to get in at a low, right? Even though a lot of us been deep in gold for a long time now. But there's a lot of newcomers to gold. So I understand that. So underneath, we have the $2,000 level offering a bit of support. And therefore, it's likely that we have plenty of buyers in that area. And then, of course, the 50-day EMA near the $1,975 level, offering significant support as well. Ultimately, I have no interest in shorting this market. Why would you? Yeah. And I think that it's only a matter of time before the buyers come back in and try to take advantage. I agree with that heavily. Just watch what's happening with the world economies, the central banks, and particularly the United States economy is going to tell you a lot, because those are the people that may have a lot of retreating to do to gold, silver, and platinum. All right. It says gold, of course, will be used for wealth preservation, unquestionably. As we continue to see a lot of concerns around the world when it comes to global economic movements. But at the same time, it's a situation where the overall trend will eventually assert itself. And therefore, I think it's only a matter of time before buyers come back in and take advantage of cheap gold. To the upside, the $2,100 level is a potential target, but it may take a while to get there. I agree with that. It depends. There's a lot of factors. After all, we have seen quite a bit of noisy behavior in general, and therefore I think that we will continue to fight back and forth, but obviously with a bullish over time. After all, this is a market that continues to see a lot of choppy behavior, but at the end of the day, the US dollar has taken it on the chin, and therefore think that it will probably cause issues for anybody trying to short gold. With that being the case, I think you got a situation where you have to pay close attention to value and take advantage of it as it occurs. I have no interest in shorting gold due to the fact that strong trends like this typically continue to find plenty of buyers. And of course, there's a lot of uncertainty out there. All right, there you have it. That's a pretty good article there. All right, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.